Hey everybody, this is Jim at SB500chart.com using time-honored techniques to understand modern markets. Hey, let me say something right off the bat here. In case you don't wait till the very end of the video where I thank my subscribers, thank you to my subscribers. There. And I mean that. I hope you feel that you're getting something valuable out of these charting techniques. This is after the close on May 15th, 2012. Before we take a look at the S&P, I just need to remind you, as always, that the chart and the video, the website rather, and the video are for educational purposes only. Nothing stated at the site or in this video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research. And you need to make investment decisions that are honestly suitable for your personal financial situation. I'm not a licensed financial pro, just a guy who draws lines on charts. Okay, let's start out here looking at a 30-minute chart. And you can see if we look back, tell you what, let's make this an hour. There we go. You can see if we look back on this chart that we have been headed really straight down ever since the S&P got back to this neckline of this little triple top pattern up here. And you'll recall, if you were a subscriber for long enough, and probably even if you subscribed 2 days ago, you've picked it up, that we've been watching this large head and shoulders pattern right here that formed really essentially from early February, and it took about right at about a little bit more than 3 months for this pattern to form and complete. And of course it completed when this neckline broke down. So we had two necklines. We had the neckline from this little triple top. This triple top was the crown, if you will, of the head of this head and shoulders pattern. Now, you may ask yourself, well, what is a head and shoulders pattern? Well, I'll tell you what it is. A head and shoulders pattern, according to John McGee, is the transferring of shares from from strong hands to weak hands. So really, when you look at this pattern and you see it in its purest sense, most of your strong hands got out actually probably on this left shoulder. Okay, that's where people said, I've had enough. I've made some very good profits. At that point, the market had gotten back to about 1370, which was also the May 2011 high, and people said, hey, we've made this mark from all the way down at about 1080 from October. That's good enough for me. And when these people finally started to sell, we broke this trend line right here, and the market sold down. Well, then you get this mixture of activity that forms the head. And a lot of what forms this part of the chart is kind of the last influx of folks who think, wow, the market just sold off again. They're not really watching this trend line. Or if they are, they're extremely savvy traders who expect a back test on this line, then they get out up here. So make a long story short, then the market breaks another fairly long-term trend line right here when this triple top broke. And at that point, anybody who watches charts would realize this is a busted puppy. But we still get one more rally I don't want to sound mean or anything, but you get one more rally as essentially those who have not been paying much attention just say, oh, the market's down, time to buy, without really thinking about it that much. So then they get trapped in this. They buy it, as a matter of fact, all the way up to a perfect back test of this neckline, and lo and behold, they pay the price for having done so. So that's what that head and shoulders is all about. Now, as we look at a shorter term chart here, looking at a 5-minute chart, I made the observation yesterday that this consolidation pattern that we had been in all the way from the 8th through the 11th, which was Tuesday through Friday of last week, that this pattern broke down yesterday. And with that breakdown, we know that we look for a minimum target from this pattern alone of about 1330. And today we got that minimum target from this continuation pattern. Call it a bear flag, if you will, but it serves as a continuation pattern of the downtrend. Now at this point, it would not surprise me if we get a decent bounce. That really would not be out of the question here at all. But and I'm not going to tell you that it is for sure going to happen, but I will say this: if we do bounce here, and we rally up, and we even rally as high as possibly the high 1350s or the low 1360s, I need to remind you that this lower target from that head and shoulders top has not been met, and I'm still expecting a trip down to 1308, 1310 as a minimum target from that head and shoulders top. Here it is. Boom, boom, boom. There's the height of our head. We measure that from the spot where the neckline was taken out, and that gives us 1308. So I'm just saying, keep that in mind. If there's a rally, it's probably not a rally that's going to produce a long-term result. It likely would be a rally that should be sold. Now, I want to say one more thing. I don't tell anybody what to do because I got no business doing that. The reason I do these videos is because I've just got a knack for reading charts. And the reason I have subscribers and the reason that I do the weekly updates for everyone to see is I find this kind of analysis absolutely amazing. And I find it very intriguing that we see so many times these target levels get hit almost perfectly. And guys, I think we're going to get down to this level. I would love to see a rally. I would love to see this thing get back and test, and test this maybe even as high as this apex, which would be 1365. That would be wonderful. But I am expecting either this line or this line to get tested before this is all over. So we should see the very low 1300s as a minimum target from the head and shoulders top. So today the good news is we called for a minimum target of 1330 from our consolidation pattern that served as a continuation. We got that today. Now, bearing in mind that oftentimes these minimum targets are designated as minimum targets because often there will be a bounce at that level. Let's see if we get a bounce tomorrow, because certainly, for crying out loud, the markets have been down for that was not really a down day, but 1, 2, 3, 4, 5, 6 sideways. We've really been down for 2 weeks. So let's see if there can be some kind of little intermediate bounce here. But if there is, look for these signs of resistance. Look for some of these trend lines to create resistance, and I would just use caution. We've got strong resistance here at this 1366 level, which is also where this apex would be in a couple of days. So just saying, look at your chart, do your own due diligence, and thanks for watching this video. And I want to remind you to look for videos after every day's close or over the weekend. I don't always do the weekly review until Sometimes I don't get that done till Saturday or even Sunday afternoon. But thanks again. Take care, and good luck to you.